Hi everyone, welcome back. If you're new here and if you want to learn more about how to run a small business, if you want to learn how to save on taxes and about personal finance, I hope that you consider subscribing to my channel. In this video, I want to talk to you about 5 main reasons why small businesses fail. In this video, we'll talk about those challenges that the majority of small businesses run into regardless of what is going on in the economy. Why do small businesses fail? Business failure isn't something that you want to think about when you start a business. But according to a report that was published by the Small Business Administration, about 20% of business startups actually fail in the first year. About half fail within the first 5 years. By year 10, only 33% of businesses survive. So let's talk about top 5 mistakes that you want to avoid. Mistake number 1 is a lack of planning. Anyone who has ever been in charge of a successful major event knows that it is because of your strategic planning and your hard work that the event is successful. The same could be said here. Part of your planning should cover your business plan and your marketing plan. And you would be surprised to know how many small business owners know nothing about those two things. So let's cover those next. Mistake number 2 is not having a business plan. Your business plan is your strategy. It details your business niche and your target market, your marketing plan, your financial projections, plans about your staffing, and the features of your products or services. It is your business plan that provides the strategies that you need to move you from where you are today to where you want to be tomorrow. Plus, if you want to take out a business loan for your small business, any bank will ask you for a business plan. So it is not really optional. You have to have it. You should have one, even if it's a very simple one. Many small businesses fail because of fundamental oversights in their business planning. It must be realistic, and your business plan must be based on accurate and current information. It is okay to be a dreamer, but when it comes to your business plan, you have to be able to distinguish between wishful thinking and reality. Speaking of reality, factor in the resources that you actually already have access to or will have access to in the future. Make sure that your business plan has the key components: description of the business, your vision, your goals, and the keys to success. It has to have your market analysis, potential problems and solutions. Your financial section should have your capital equipment and supply list, your balance sheet, your income statement, and preferably your cash flow analysis, as well as sales and expense forecast. A good solid business plan usually includes marketing, advertising, and promotional activities, as well as information about your budget and how you plan to manage your company's growth. Now let's move on to the next mistake. Mistake number 3 is not having a marketing plan. A marketing plan outlines the steps that you need to take to sell your products or services. You can think of your marketing plan as a part of your overall business plan. It will identify your niche and the marketing strategies that you're planning to use to reach your target market. Now let's move on to the next mistake, and this one is extremely important. Not doing the research to determine if there is a market for what they want to sell or the services that they want to provide. The best business ideas will fail if there simply isn't a market for what you try to sell, or if the market suddenly disappears because of economic changes or natural disasters. You may be extremely passionate about, let's say, growing organic fruit and vegetables, but if you don't do the research and your products are twice the price of what someone would pay at an organic grocery store, you will likely have a very difficult time selling anything. So research the price, what it will cost you to create your products, to grow your fruits and vegetables, and the size of your potential customer base. Before you start a business, you need to see if there is a market for what you plan to sell, and if that market is big enough to be profitable in your case. This is very obvious, but I just want to say this. Keep in mind that everyone is not a market. Everyone is not a market. The market must be a group of customers that you will be able to reach with the marketing dollars and the marketing resources that you have available. One of the most common reasons for business failure stems from having a poorly defined niche. A niche refers to a target market or area that you specialize in. If you try to make your business attractive to everyone, it will end up being attractive to no one. The narrower your market is, the better your odds of speaking to the very people that you want to serve. So keep that in mind. Now, let's talk about the biggest mistake, the number one mistake that forces businesses to shut down. A primary reason why small businesses fail is a lack of funding or working capital. You can't rely on a stable, continuous cash flow when you first start your business or even in the first couple of years. You cannot rely on that. You have to have available cash. There is no way around that. The last couple of years prove just how unpredictable life gets, right? You want to be aware of how much money is needed to keep your operations running on a day-to-day basis, including funding your payroll, paying fixed and variable overhead expenses such as your rent, your utilities, and ensuring that your vendors are paid on time as well. I want you to know that owners of failing companies that don't do well and eventually close their doors, those owners are less in tune with how much revenue is generated by sales of products or services and what their expenses are. They don't want to get involved in that type of information. This disconnect leads to funding shortfalls that can quickly put a small business out of operation. Even if you have a CPA, you can't fully rely on them to run your finances. You need to be involved. You need to be the ultimate leader. Being out of touch with the intricacies of how your business generates revenue is one side of the issue. The second reason is not knowing how to price your products and services. To beat out the competition in highly saturated industries such as, let's say, restaurants, routine services like landscaping, cleaning, companies may price a product or service lower than their competitors with the intent to entice new customers. While the strategy is successful in some cases, businesses that end up closing their doors are those that keep the price of a product or service too low for too long. So the biggest and the most important mistake to avoid is not educating yourself on a variety of financial aspects of running a business long before starting one. Of course, it's virtually impossible to avoid running into all sorts of financial obstacles or problems. Life happens, but the best thing to do is to establish a realistic budget for your business and then figure out a way to secure capital before your operations actually begin. I hope that this video was helpful. If you enjoyed this content, please do me a favor and hit the subscribe button and ring the bell to enable notifications. Leave me your video suggestions, your questions, your comments in the comment section below. What do you want to see in my next videos? I will base my content on your suggestions. So definitely let me know before you leave. And I will see you in my next one soon. Take care.